Jason Kelly, is the private equity industry as evil as its critics make it out to be?
It seems not to be. It certainly is incredibly pervasive in our everyday lives, and one of the interesting elements to explore is where the money actually comes from, and that goes back to the public pensions and endowments and sovereign wealth funds that have backed these guys. They certainly don't seem to think on balance that this is a bad business.
How pervasive and profitable is it?
It's incredibly profitable, both for the end investors and certainly for the men and women who practice it. I mean, you're talking about hundreds of millions of dollars a year in compensation, and that's largely because of the structure of these funds. I mean, they pull their profits out. They get 20% of all the profits from a successful deal, and they also pay a very low tax rate, as you know, which has become a big issue in this presidential election.
What makes for a successful deal?
Successful deal generally means buying something at a low price and selling it in a few years for a lot more. How they get from A to B is really one of the things that has become one of the most controversial issues, both in the campaign and really for people who look at this industry. Sometimes they cut jobs, sometimes they sell off units, sometimes they build things, sometimes they buy things. There are lots of different levers that they pull.
Can you give me an example of a deal which really had a lot of those objectionable practices in it?
Well, one of the deals that people are really looking at hard is the biggest deal of all time, the TXU takeover of 2007. $43 billion. This is KKR and TPG, two of the biggest names. It's the biggest power producer in Texas. Cheap debt, and a company that has really gone right up to the edge of bankruptcy so far, and people don't know how that's going to turn out.
One other thing we've been hearing about the private equity industry recently is about colluding.
Right.
These companies colluded with each other on some of these deals. What's your view on that?
It's really hard to say exactly what was going on behind the scenes. It's an interesting window into, again, the boom when TXU and other deals happened, when companies were working together, working separately, teaming up with one guy on one deal and then another guy on the next. And you know, these guys are ultimately sort of frenemies, right? I mean, they're together on one deal and then going head to head on another.
Well, are some private equity firms better when it comes to those objectionable practices like stripping and layoffs than others? Is KKR better than Bain or worse, or Carlyle? How does it pan out?
Well, one of the interesting things we've seen, especially with Carlyle and KKR of late, is really pushing to kind of prove their worth, socially even. They're doing, ESG type initiatives to show that they're good for the environment, which is interesting given that we talked about TXU, a big power producer. They're talking about job creation. They're talking about, the health of their workers. So they're really trying to prove the case more and more and really trying to be out front to answer those critics.
Finally, have we hit the top with the private equity industry? The firms have all gone public, or most of them have. It's now a big issue in the presidential campaign. So is this the last of private equity now that these firms that have once been in the shadows are now out?
It is certainly not going to be as lucrative as it once was. I mean, these guys are deeply entrenched in society, so I don't think they're going away, but this is not going to be a business that's going to make people as rich as it once did. Having pulled them out of the shadows, they're not going to be able to command the sorts of returns and deliver the sorts of returns that they have historically.
This market has fewer players.
We're coming into a Monday where we're
would enter in a new stage of tech.
It's a stock picker's market.
Welcome to the 5 dumbest things.
Apple reported earnings